Welcome back. Today we're talking about a topic that is literally wiring the entire future. We usually obsess over gold or the magnificent seven tech stocks, but there is a quiet giant in the room that has been absolutely exploding. I'm talking about copper. Yes, the stuff in your plumbing. But apparently, in 2026, it's becoming the most critical asset on the planet. I'm joined by our financial expert to help us decode this. Welcome back.
Great to be here. And you're right, calling copper a quiet giant is perfect. For decades, we just called it Dr. Copper because it had a PhD in economics. If prices went up, the economy was booming. If they dropped, recession. It was just a boring industrial metal. But heading into 2026, copper has transformed. It is no longer just industrial. It is now a technology metal. That shift changes everything for investors.
I love that distinction, a technology metal. But I've been seeing headlines that copper hit some wild record highs recently, over $11,000 a ton. What on earth is driving that? Is this just inflation or is something else going on?
It's a mix, but that record of over $11,700 a ton is really driven by three letters: A, I, and E: artificial intelligence and electrification. An AI data center is essentially a massive copper sponge. You need it for power cables, cooling systems, transformers, and grid connections. We are seeing a capital expenditure boom in AI infrastructure that is unprecedented.
Wait, so you're saying ChatGPT is raising the price of my pipes?
In a way, yes. Think of it like this. A standard server rack needs a certain amount of power. The new AI racks running those high-end chips need significantly more power density. More power means thicker cables and more transmission lines. We are talking about upgrading the entire electrical grid to handle this load. And the grid is made of copper.
That makes sense. It's like trying to push a fire hose of electricity through a garden hose. We need a bigger hose. But isn't there plenty of copper in the ground? I feel like I'm always hearing about new mines. Why is there a shortage?
That is the billion-dollar question. Geologically, there is plenty of copper left. The problem is, it is incredibly hard to get out of the ground now. The easy copper, the high-grade stuff near the surface, was mined 50 years ago. Now we have to dig deeper, which costs more money. Plus, you have geopolitical issues. Look at the Cobre Panama mine shutting down recently, or the protests in Peru. Supply is extremely fragile.
I actually read something about a massive mine in Indonesia, Grasberg. Didn't they have issues too?
Exactly. The Grasberg mine run by Freeport-McMoRan is one of the world's largest copper and gold mines. They had delays in their smelter expansion and operational hiccups. When a mine that big sneezes, the global market catches a cold. So you have this perfect storm. Demand is skyrocketing because of AI and EVs, but supply is struggling to keep up. That creates a structural deficit.
Okay, so demand is up, supply is tight. That sounds like a slam dunk, but I have to play devil's advocate. I saw a report from Goldman Sachs suggesting prices might actually dip or soften in 2026. They mentioned a surplus. How can there be a shortage and a surplus at the same time?
Fantastic catch. Markets are never a straight line. What they're looking at is the short term. We had a massive run-up in prices, and often high prices cure high prices. When copper gets too expensive, buyers pull back, or they recycle more. Also, there is substitution risk. If copper stays over $11,000 a ton, manufacturers start looking at aluminum.
Aluminum? Isn't that what soda cans are made of? You can use that for wiring?
You can, especially in high-voltage lines. Aluminium is lighter and cheaper. It's not as conductive as copper. You need a thicker wire to carry the same current, but companies like Norsk Hydro are betting that industries will switch to aluminium for things like AC units and car wiring if copper gets too pricey. That puts a cap on how high copper can go before people switch. So 2026 might be volatile as the market balances this, but the long-term trend is still incredibly bullish.
Got it. So 2026 might be bumpy, but the destination is higher. Let's talk about how we actually play this. If I want exposure, do I go buy copper pipes and stack them in my garage?
Please don't. The premiums are terrible and you'd need a warehouse. You have two main routes: mining stocks or ETFs.
Okay, let's start with stocks. Who are the big players here?
The biggest name is Freeport-McMoRan, ticker FCX. They are the premier US-based copper miner. They own that massive Grasberg mine we talked about, plus huge operations in Arizona. They recently beat earnings forecasts and declare a dividend. If you want a blue-chip copper play, that's usually the first stop.
And they pay a dividend. That's nice. Getting paid to wait for the price to go up.
Exactly. They have a performance-based dividend, so if copper prices are high, they pay out more. Another massive player is Rio Tinto. They are a diversified miner. Iron ore, aluminium, everything, but they are pivoting hard to copper. They have a goal to produce 1 million tons of copper a year by the end of the decade, largely from their Oyu Tolgoi mine in Mongolia.
Mongolia? Wow, that sounds a bit riskier.
It is jurisdictional risk, yes, but that's the mining game. You go where the metal is. Another one to watch is Southern Copper, ticker SCCO. They operate mostly in Peru and Mexico and have arguably the biggest reserves in the industry. They just got the green light for a project called Tia Maria in Peru that had been stalled for years. That was a huge win for them.
Okay, so Freeport, Rio Tinto, Southern Copper. But what if I don't want to pick a winner? What if I pick the one mine that strikes or floods? Are there ETFs?
Smart thinking. Single miner risk is real. The most popular ETF is the Global X Copper Miners ETF, ticker COPX. This holds a basket of about 40 companies. You get Freeport, Southern Copper, but also Canadian miners like Ivanhoe Mines and Chinese players like Zijing Mining. It spreads your risk globally.
I like that. Diversification is my friend. Is there a difference between buying the miners and buying the metal itself through an ETF?
Huge difference. There is an ETF called the United States Copper Index Fund, ticker USCPR, that tracks the futures price of copper. If copper goes up 10%, CUPR goes up roughly 10%. But mining stocks are leveraged to the metal.
Leveraged? Break that down for me.
Sure. Say it costs a miner $2 to produce a pound of copper. If copper sells for $4, they make $2 profit. If copper goes up just 50% to $6, their profit margin goes from $2 to $4. Their profit doubled even though the metal price only went up 50%. So in a bull market, mining stocks often outperform the metal. But the reverse is true. If prices drop, their profits get wiped out much faster.
That is a crucial distinction. So if I'm really bullish, the miners give me more upside but also more volatility.
Precisely. And since we expect volatility in 2026, the miners might swing wildly. But if you believe in the AI thesis, those dips are buying opportunities.
What about risks we haven't mentioned? We talked about substitution. What about trade wars? I know tariffs have been in the news.
Tariffs are a major headwind. Copper is the most global commodity. It gets mined in Chile, smelted in China, and used in the US. If the US puts tariffs on imported metal, it disrupts that flow. A trade war usually slows global growth, and if growth slows, factories build less and buy less copper. That is the biggest risk for 2026. If the global economy catches a cold, copper feels it first.
So Dr. Copper is still diagnosing the economy after all.
He never lost his license, he just got a second job in IT.
I love that. I want to ask about India quickly. I read that India is becoming a huge player. Is that shifting the demand map?
Significantly. China is still the 800-pound gorilla, consuming over half the world's copper, but their growth is slowing. India is where China was 20 years ago. Massive infrastructure, urbanization, and renewables. Companies like Hindustan Copper are seeing share prices jump because domestic demand in India is skyrocketing. For a global investor, watching India's import numbers in 2026 is key. They might be the floor that keeps prices high even if China slows down.
That's fascinating. Passing the baton of growth. Okay, let's bring it back to the portfolio. Where does copper fit in 2026? Speculative play or co-holding?
I view it as a satellite holding. It's part of your commodities bucket. You generally want 5 to 10% of your portfolio in natural resources to hedge against inflation. Copper is arguably the best growth commodity right now because of the tech angle. But remember, it is cyclical. It will crash at some point, so don't bet the farm.
Right. Don't sell the house to buy copper futures. Got it. One last thing, recycling. I've heard urban mining is a thing. Is that investable?
It's getting there. As prices stay high, recycling old cables becomes very profitable. Most are private companies or small parts of waste management firms, but big miners like Rio Tinto are investing in recycling tech too. They know we literally cannot dig holes fast enough to meet demand. So a circular economy is the only way forward.
So, summarizing, for 2026, record demand from AI and EVs, stubborn supply chains, potential volatility next year from tariffs and substitution, but a massive long-term trend. And the way to play it is diversified miners like COPX or blue chips like Freeport.
You nailed it. And keep an eye on those dividends. If copper stays above $4.50 or $5 a pound, these companies are printing cash. It's a way to get paid while the AI revolution plays out.
Get paid while the revolution plays out. I like that. Any final words for the copper bulls?
Patience. Commodity super cycles take years. Don't panic if copper drops 10% next month on a bad manufacturing report. Look at the data centers being built. Look at the EV chargers. As long as that infrastructure is being built, the metal has to come from somewhere. The fundamental thesis is stronger than it's been in 20 years.
The metal has to come from somewhere. You can't download copper.
Exactly. You can print money, but you can't print copper.
Well, this has been incredibly eye-opening. I'm definitely looking closer at those ETFs. Thank you so much for breaking this down.
My pleasure. Always happy to talk markets.
And thank you all for watching. If you found this helpful, hit that like button and subscribe. Let us know in the comments, are you bullish on the red metal or is aluminium going to steal its lunch? See you in the next video. Disclaimer: this video is for informational purposes only and does not constitute financial advice. The market involves risk, so please conduct your own research before investing.